All right, we are live. Vivek Krishnamurthy. I'm excited to dive in with you, man. You've been at Commerce Ventures for 4 years, I take it, and been focusing mainly on payments. But I guess broadly, Commerce Ventures implies a focus on payments and commerce. Is there a particular way you segment out your focus over the last 4 years within commerce? Or I'm curious what
Yeah.
you've been up to.
First off, thanks for having me. Big fan of the show, so excited to be a part of it. I think life was a lot easier 4 or 5 years ago. You got to say that you worked in FinTech, and that was kind of enough. People were like, "Oh yeah, you invest in those weird Goliath payment companies from the '80s," and weirdly, that has changed a lot. So we now have kind of a more fancy moniker. We call it the Commerce Continuum. We think of it as the spectrum by which consumers and businesses shop, spend, save, and secure. So if I go one level deeper, where do you spend your money? What are the retail environments in which you do so? How do you spend your money? How do you think about spending versus saving or investing it? And how do you secure your financial life, right? So that's insurance, digital identity, fraud, things of that nature. If I take even one layer of salesiness off that too, it's FinTech, InsurTech, and RetailTech. I spend 99% of my time in FinTech and InsurTech, and even within there, probably a little bit of a bias towards what we call enablers relative to kind of full stack financial services providers. So our portfolio looks a lot more like Bill.com, Marqeta, Socure, Ford, or MX than kind of Chime or Metromile or Lemonade or full stack providers, though there are a couple of notable exceptions like H.M. Bradley and Kin and Millbury. But for the most part, I think we really like the tech side of FinTech and try to kind of contextualize that in the world of financial services as it changes around us.
I actually didn't recognize a lot of the names you mentioned. Are those names that are consumer facing, or are those more B2B behind the scenes?
Yeah, we have a lot of forgotten white label companies in our portfolios. So as an example, right, Marqeta and Bill.com as kind of payments infrastructure companies. Socure is an AML KYC business that helps neobanks and payments companies, and others kind of like vet who's coming in through the front door. MX is a data aggregation platform like Plaid, kind of folks who I think we like to think are doing like the gritty, dirty work that other people don't want to do. But finally having like their day in the sun from a relative perspective. I think post Plaid, I think there's a greater appreciation for those types of businesses.
One thing I didn't hear you say is crypto or any focus on blockchain. Is that part of the focus, or will it be, or?
I think that's a sign of humility. I think crypto absolutely is, in the sense that it is a large and growing portion of financial services, and to that extent, we are spending a lot of time getting up to speed there. I think there's certain parts of it that feel a lot more friendly and familiar to us, so we spend a lot of time in crypto infrastructure, specifically thinking about things like AML and KYC, virtual tools for RIAs to help you manage your own crypto. We've been looking at kind of the banking as a service equivalent of crypto. So we're investors in Prime Trust. So we'll do stuff that is what I'll call like in the background, enabling third parties to interact with the world of kind of crypto and blockchain. We have yet to make a core bet in a consumer-facing or a currency or a token or a business that primarily makes money off its token. I don't think that's a never, but we want to be mindful of it being quite easy to lose your shirt doing it if you don't know what you're talking about.
Yeah, totally. And it's often just so difficult to understand if the price is where. I guess if you're making a bet, I was interviewing a guy from Multicoin Capital who they focus entirely on crypto, and he said to me that they think so long term that the price is irrelevant, and that was a difficult concept for me to wrap my mind around. But I think especially in the beginning, it doesn't matter.
Yeah.
It could be 5 orders of magnitude off, but if you're like $1 to $5, then it might be. Yeah, you're playing so whether it's going to be 100x or not.
I really struggle with that because there are people a billion times smarter than me, and there's many of them who really embody and live that mantra, which is like your big winners are going to be your big winners. So caring about extra 2x the price or 3x the price doesn't really matter. I think the flip side is like you and I could use that argument to validate any deal ever, right? If you're optimistic about the upside. The argument, though, I would say is if you look at even in our own portfolio, a company like Bill.com that I forget where it's trading now, but it's like $30 billion or something of that nature. I think we'd probably be lying if we said that that's what we underwrote our initial investment to. I think what's turned out, even in like traditional financial services, is the markets turned out to be way bigger than we realized. And then on top of that, COVID happened, and there was an acceleration of digital payments and digital commerce, and that kind of accelerated the growth as well as the magnitude of the revenues you could possibly attain in a given year. I think the market's still like ingesting what to do with that. Like, what do you do with these businesses that are 15 times bigger than you thought you'd be? And then when you start thinking about crypto, which is like not disintermediating, accounts receivable or bill pay, but fundamentally like fiat currency, or like the way people think about cross-border payment, I can see how someone would reach that conclusion where they're like, we're not talking $5 billion, we're talking $10 trillion. So who cares?
Yeah.
But I think there's that line of like, certainly for myself, of like, am I coming into it with an informed perspective on the actual magnitude of the outcome? Or am I so excited about the potential that I'm willing to I just want to get in the game, right? Mm-hmm. I'm willing to be a little bit like less stringent on my underwriting to just get in the game and learn. I don't know. I'm a lot more nervous about doing the second.
Yeah, I think part of it is just the volume of really high quality companies is lower on crypto. Not necessarily now. I think less so now than it was a couple of years ago. But there weren't that many really great businesses built on top of, or protocols built on top of crypto and blockchain, because it was so early. But in startups, traditional startups, it's like the amount of deal flow you could get if you're an active full-time angel investor is like a couple hundred. You could see a couple hundred deals a month, and so you can get very precise with like the terms and negotiating terms, because you have such comparison to squeeze them into. Whereas crypto, it's also a different investing model. You have no unique access unless you're investing prior to the ICO or prior to public tokens being available. Whereas like in the private market, like you invest in a startup, once they close the round, you can't. There is no more investing until the next round. And so it's in some ways it's less advantageous for traditional investors, I'd say. The flip side is that more people have access.
I think it's interesting when I think about spaces generally. There's like 3 or 4 things you need, and I'm sure there's like probably 5, right? Like one, there's like you need the fundamental technology to be good enough that it can actually be used by consumers, right? Like I think about like QR codes as an example, right? QR codes are like, they're good enough to be used now, and actually now there's a use case, people are using them, even though they've been around since like the late 80s for like auto part recognition, I think is the first use case. So you need kind of like tech to be like in a place where people can use it. You need consumers to, whether that's individuals or corporations, to actually want to adopt it and be like at the right place in the risk reward curve where it's worth it to them to take a gamble. And then you need great founders, and then you need capital. It's a weird chicken and the egg, right? You never know what you need to start. And I feel like when I think about 4 or 5 years ago, we saw some really sharp people. We saw basically no commercial or consumer like adoption at scale. The tech was kind of, to your point, like a little broken but interesting. Now I think we've seen certainly capital and founders, great quality founders who are like, hey, if I'm going to take a bet on myself in any category, like I'm going to go big, let me go bet on crypto. And I think great capital tends to follow great founders. I also think the tech is now at a place where it's like one step above, which enables it to be used, and that actually de-risks it, remarkably so for corporates and consumers. So you're seeing that like, a lot of these factors like turn right, if you will, at the same time. And I think that's where there's like this spin wheel. Now, I think we just don't know like where we are on the full journey. I think that's a little bit more tricky. But I don't think it's going anywhere. Certainly for the next few years. I think all 4 of those things are going to stick around for a while.
Yeah, totally. I almost think that I wonder if FinTech is a subset of crypto instead of the traditional, like vice versa. On commerce, where are you guys? I actually interviewed Dan Rosen maybe like 4 years ago now. Could even be longer. I started the show in 2013. So he was one of the early people I had on when he was, I think, just starting Commerce Ventures. So now you've got a lot of people on the website. How many people work full-time at Commerce? And I guess any other measures of progress, how much capital it's raised or...
Yeah, it's been a journey, right? So Dan started in 2013, and it was 2 folks at the fund for effectively 4 years. And then our principal, Dan Rivet, moved on to the startup world. I kind of like joined up, and it was Dan and myself, and then very quickly we added kind of 2 more folks. It was 4 of us then for another 4 or 5 years. And actually, as of like August, we went from like 4 or 5 folks to like 10. So we've had our own kind of like startup moment. And we, I joined when we had about $50 million under management. We probably about 260 or something like that now. So we just got off the back of a $155 million fundraise, which was a year after a $65 million fundraise. So it's been super fun. And I think, it's the closest a venture fund will ever be to being entrepreneurial. Certainly less risky than an individual startup, but yeah, we've had to kind of hire our own folks and send out offer letters and build out a 401k plan. We have dental now, which is pretty cool.
Sweet.
So just the usual trials and tribulations, but yeah, no, it's a real business. I think when you spoke to Dan, it was probably like just Dan and like maybe a living room, maybe he had the office, but now we've got 12 folks. We have some folks in Boston, some folks out here. We've got a controller and some EAs who are incredible, and the full team. So.
And what do you think are I'm sure a lot of this is true of general funds, or funds generally, but what are the key activities? I guess making sure you have top of the funnel deal flow, you're getting investors or introductions to founders at the right times. Is that the vast majority of the attention, or
I wish that's the best part. I wish that was the case. I find that like venture's a really interesting kind of like organizational function. Like we're salesmen of capital, right? There's no product, right? If you're a product manager at Lyft or the CEO of Lyft, you have like a car service that you can offer at the end of the day that you work towards. Like venture is a much more ambiguous job, and I think about it in a couple of functions. Like there's one that you just mentioned, which is like new investment sourcing. Then you have like portfolio investing, so making sure that the folks in your portfolio, when they want to raise more money, you have the conviction to put in more at prices that they determine. Then you have portfolio management, which is, hey, we promise you we'd help if you let us give you money, like let's actually help, right? And we can talk a little bit more about how we do that, but that's far ranging, right? That's everything from we're going to help you build a financial model to one of our investors happens to be person X at a large bank. They're looking for the solution. Let's broker an introduction to get you some revenues. And then there's the kind of more thematic work, right? When you're certainly at a vertically focused fund, we spend a lot of time just making sure we know what we're talking about. I think the promise of working with a fund like Commerce is that you have a bunch of people who like live and breathe FinTech and retail tech and can help you think through decisions that you wouldn't have to think through if you haven't lived your life in those spaces. And so that's a constant education. Obviously, our founders teach us about stuff, our investors teach us about stuff, but some of it is proactive, right? It's conferences, it's reading material, it is talking to ex-operators about problems that they had, talking to current operators about problems they wish kind of were solved, whether that's kind of at startups or large corporates. And then the kind of like next segment is related to that, which is like building that actual network. Right? Like when we tell people, hey, we can introduce you to folks, we need to make sure they pick up the phone. So doing proactive networking of kind of founders and operators in large Fortune 500 companies, that's a part of it. And then there's like the unglamorous stuff, right? Which is like the admin, the reporting, payroll, all that stuff that like you just kind of have to do. But certainly if you think about like fund structures, a big portion for us are quarterly letters and making sure our investors know kind of where things are marked. So that's the gamut of like where we spend time. And I think the interesting thing is there's no kind of like, you don't split up the day 20%, 20%, 20%. It's more about, the reality is like founder and LP needs go way to the top and everything else kind of like you do when you have the opportunity to do. So it can be anxiety inducing because there's no schedule, but it is a fun job.
Yeah. I want to ask you about the networking portion of it, because I imagine you're learning passively and actively. I'm sure you're reading things that are table stakes and open source on Medium, or if there's articles that people share. I find personally I learn a lot from these conversations, but I learn a lot from people. It's kind of the way that people describe the experiences, whether it's like, oh, the regulation in this particular sector is really, really hard, or like there's a great opportunity here because of XYZ. And it's like people can explain things. I find I absorb the overall gestalt of it from when people are describing it. And when people pitch you all day, I found being a founder and pitching many investors, you're laying it out there. You're like, this is our secret sauce. This is everything we know in the best possible way that I can explain it to you. And I've practiced explaining it in a way that makes sense. So it's geared specifically so an investor can understand what an entrepreneur is trying to explain to them about why this is an opportunity. The hard part, I would think, is how do you add value after? Like the intros, because that stuff, it's not, no one's, what, unless you've had a job where you're, working in sales at a payment company, you're not organically meeting, people all over the place. And there's so many companies doing so many things. Is there strategies you've seen at other firms or that you guys do to build networks?
Yeah, I mean, you're talking about the things that like keep me up at night. Yeah, so we spend a lot of thinking about this. I will say though, as like a shout out to founders generally, like I find the first 6 slides of a founder's deck to be like super selfish of me, right? Because there's someone who has decided that this market and this opportunity is so important that they're willing to like risk their 401k at their job to go and do this as a single pointed focus and passion. And I think you're never, it may not be an unbiased view of that market, but is a well-informed view of that market. And I feel like that is for sure the best way to learn. Certainly, like earlier in your career, hopefully as you progress, you have other nodes of information that will feed you stuff as a venture investor. But so I'd say the first 2 or 3 years, like hearing founders pitch businesses and say, hey, like I quit my job because I think there's an opportunity to build a PayFac. And I'm like, you must have really believed that opportunity. Please tell me about it, right? That's a different level of commitment. To your point, though, yeah, like how do you add value? I think that that's the beauty of it. Like company building is one of the most like personal and miserable and amazing experiences, as you know, right? Like in the world. And there's all sorts of archetypes of funds who are out there that help businesses. Some folks they're just partners on the board who you need to be able to call when you're having a stressful day. And you've got a horrible HR problem, and also your CFO isn't panning out, and you just need someone to talk to about triaging problems and solving it. And that we find that a lot with amazing generalist investors who have just been around and helped companies for generation after generation. There's other folks who are far more pointed. So we know some folks who have talent teams where they'll go and say, hey, one of the biggest blockers to building a company is having the best engineers and the best kind of CXOs. We're going to spend all our time mining our network to give you the best people. And then there's folks like us, and I'm sure there's other categories, but we're hyper-focused on like vertical relevance. So if you think we have like 90-some portfolio companies, call 40, 50 of them in core FinTech. Of that, 30 of them, let's say, are enterprise SaaS providers in FinTech. And you're having a problem thinking through, man, how do I crack a 10-month sales cycle at Bank of America? Like, I think at this point, we've had the like luxury and misfortune of like seeing 50 companies sell to B of A. So not only do we know maybe the person you need to talk to, but what's normal? How long should you wait before you send that follow-up email? How do they like to think about things getting priced? Okay, if that door's not coming, is there someone at Wells you should be talking to? How would you change the pitch between one and the other? Kind of being able to go from the super, super tactical all the way out to, hey, like, we've seen this 100 times. Your next product should be this. And like also these are the 4 or 5 people who like love stuff like that. Like let's help you like iterate and test that pitch over and over again. So that's how like we like to get our hands dirty. We're kind of product and vertical obsessed. But there are so many ways. I think the journey is so difficult that founders tend to appreciate any help that they can get. So funds have figured out different flavors. I will say though, there is probably a deserved pension among some VCs that they kind of put in money and then hang out for 8 years while founders go and build incredible businesses. And I think it takes, I feel fortunate, like Dan is part of the reason and our partners, Matt and Ice and others. But I think our fund ethos is very much about kind of being grateful to be along for the ride. And, we have a unique fund where our first checks tend to be a little bit smaller. And we actually invest aggressively in follow-on rounds, so much so that the majority of our cost basis is in follow-on rounds. So our kind of rationale to founders is, look, like if we didn't help you, our pro rata would mean nothing for our fund. This only works if we're so helpful that you actually want us to buy more, which in this market is incredibly difficult, even for folks that you like. So that's how we've approached it. And so far it's, knock on wood, it's been working.
Incredibly difficult in that it's very competitive on the capital side. It's hard to get into really good deals.
I think it's interesting. I feel fortunate that we see awesome founders. And I think actually, this is a weird thing to say, I think they're just more good deals. I think that like FinTech specifically is so much bigger than any of us imagined. It's actually easier for you and I to sit down today and come up with a really creative idea that hasn't been done before. So in that way, I think we and many other people are seeing amazing founders build amazing companies. I think because of that realization, there's capital has flooded this market, and people used to wait till you had product market fit. And I think now the excitement about the category is that everything might have product market fit. So folks are willing to invest kind of large sums of money at high prices at earlier stages. And the only way that math works for those investors is for them to take 100% of the round, right? And for the founder, you want as little dilution as possible, so you want that number to be as small as possible. So what used to be, like, oh, we'll do a $3 million lead and then 5 other funds will syndicate. There are some times where you're seeing folks going like, no, there's only room for one lead, and even that lead is being cut back, right? So the ability to, or the right to be able to invest in those categories, or even in proratas and those businesses, is purely a function of your relationship with the founder and like whether or not you've earned it. In some ways, as you can imagine, it's frustrating for VCs, but in other ways, we kind of like that challenge, right? If we're not helping, like, what are we doing? Eating up 1% of your business or 3% of your business or whatever we end up doing. It's not right. So
yeah. What's your story? You're a young guy. You got into venture super early. How did you think about that decision? And consider it if somebody else is, say they're out of school and they're 22, 23, 24.
Sure.
They're thinking about joining a startup or going to venture. What was your thought process?
Yeah. You hear this, I've kind of an atypical journey, not from a career pathway, but I think a lot of people, when they get asked that question, give you the like, oh, I stumbled into it path. I think it was a little bit more purposeful for me. The first part of my journey is a little bit of a mess. So I actually grew up in the Bay Area. I grew up in Cupertino, and I could, like, if you stood on the rooftop, I'm scared of heights, so I don't, but you can see the Apple building, like, from
oh, wow. No way.
My parents' house. I grew up kind of, it was like the early 90s, and every student had a laptop because like Apple and HP wanted every kid in Cupertino to be kind of technologically functioned.
Wow.
And I was largely tech illiterate. I didn't like tech. I thought it was boring. I mean, just you don't like what you grow up around, right? And there was an element, right? My street, in 2001, half my neighbors moved, right? The crash happened, and everyone had come out here for some fake company that wasn't real, or like BarnesandNobles.com hired 50 software engineers, and everyone moved. And I was like, this is not. I don't like this at all. My dad's a physicist and my mom's a preschool teacher. So we were like uniquely insulated from that world. So it was kind of the other. And so when I decided to go to college, I thought, let me do medicine. Like that seems like generally like a safe job. So I went down to school. I lasted one 8 a.m. bio lecture. I dropped the major immediately. I think I
was that bad? Was that torturous?
Oh, it was horrible. It was horrible. I think that there's like a fundamentally, this is a different rant, but I think like medicine has to be one of the most like poorly described like professions in the universe. I think there's so many shows about it, and people get really excited about the fundamental job. The journey there is not just miserable, but like so highly technical. And like wanting to be helpful and be in a patient's life is very different than like getting A's in organic chemistry. And also 8 a.m. was early. I was 17. It was a different time. And so I was like, you know what, like, let's see what to do. And I was kind of like messing around for a major. But I had always been kind of like bizarrely entrepreneurial, like not in the more typical ways, but in high school, a couple of friends and I like sold, discount burritos out of the back of our car. Like we would go and we would get these like buy in bulk, like individual resale, by the way, violation of California state law. Also, you can't do that on school grounds. So like we were threatened with a court injunction, but like just like weird little things. And I was in college, like search engine optimization kind of became a big thing. So I was like, oh, look, let me help a lot of small businesses like sandwich shops and others like get like social media branding. Did terribly, probably hurt their brands. Like it was the usual founder journey. And I was like, okay, I want to figure out like how companies work. I just want to figure, like, I don't understand how this all happens. Like, how does revenue go through a business and what are your levers? And so, like, I did the usual things. I worked at big companies. I worked at small companies. I worked at, like, I worked at GE's, and the GE's kind of, like, capital asset management group the year that actually Synchrony spun out, which is a weird thing. And I was sitting around, and I had a mentor, and she was like, look, if you really want to figure out how companies work, you got to do banking. And I was like, okay, I'm happy to give it a try. And so I applied to all the normal places, had a big fancy bank on the East Coast where I was headed, and I had kind of a mentor peer of mine in college reach out and say, hey, there's a small bank out here in San Francisco that I spent 2 years at. We love hiring from USC. Like, would you fly up? And free flight to see my parents and get a home cooked meal sounded pretty good. So I came up there, and it was 555 Mission Street. So that was FT Partners for folks who are.
Oh, I know those guys. I went to a dinner. Steve Mclaughlin, is that the guy's name?
It's Steve Mclaughlin. Yeah.
Yeah. He invited us to a dinner once.
Yeah, he's an incredible guy, and he's like been early. I mean, he left Goldman to start a fintech specific investment bank in 2001. So talk about foresight. I kind of met Steve, and at the time it was they just moved in that office, and there was a garbage bag in the conference room. And I was like, this is very different than that other bank I've been interviewing in. I spent 2 hours with him, and kind of his pitch to me candidly was that, you can go somewhere and copy and paste paragraphs into an S1 that nobody will read, or you can go help mid and late stage businesses like figure out what they're doing. And I was like, I don't know, I was naive. I was 20 years old and I wanted a job, and I was like, this sounds incredible. So I signed up, and I didn't really know the journey I was on. Right at the time, like Robinhood had just come out of beta, and like Acorns was just becoming a thing, and like those things seemed cool. But I was like, oh, let's see where this goes, and like if not, I'll just go do general tech stuff afterwards. And it's just timing, right? And my first clients were Prosper, and then Green Sky, and then like we were, FT Partners was working on Avid Exchange and a bunch of businesses at the time that were just incredible, like Marqeta's Series B and C, FT Partners worked on. And the first few clients I worked on were massive. I mean, these were like $billion deals. And I found that when you work on late stage transactions, you have to figure out what the holes are in that business and then lie about them. Right? You should say, hey, buyer or investor, these don't exist, right? Like, look at all the reasons they don't exist. And when I worked on earlier stage businesses, it was more of like, hey, these holes are here. Like, what could we do to correct them? And the founders were like, oh, like, what is attrition? Like, how does that work? Like, how would we think about like fixing this in long term? I don't know if it was egomania or what, but I loved being in a medium where it wasn't just like, let's lie about what's wrong. It's more was, let's fix what was wrong. And eventually you work at a bank long enough, you realize that like these small clients aren't paying the bank much. The big clients are. And so I had a pretty candid conversation with Steve, and I said I wanted to work with early stage businesses and in a way that like offered advice. And I kind of thought a lot about operating and thought a lot about venture. And part of the pull to operating was wanting to get my hands dirty again. Right? When we were at FT, we went from 50 people to 150, and I got to work on kind of like company building things there. And so I was like, man, going to a company would be really fascinating. And then Canada, I found Dan, and it was the best of both, right? It was kind of one or two people at the time, and like they had just bought desks for the rest of the office. And there was this vision of like, hey, we wanted to go build something. And it was still with early stage startups. And Dan's model that he had created at the time was kind of, I don't think people appreciate how hands-on it is, right? We might be your smallest check, but when it comes to like developing your product, you're spending probably less time with your general partner and probably more likely time with your angels and operators and smaller funds that like live and breathe this space. And I just wanted to be at a fund where like I'm texting our founders every week and helping them with things that are real, not just, hey, we're going to get you ready for your next fundraise. And that was the ethos he had. The other thing that what really drew me there is at the time, if you think back to 2016, which is when I started talking to Commerce, FinTech was just financial services, right? It was Lending Club, it was On Deck, it was Green Sky, it was full stack financial services companies. And I had seen on the banking side that it was impossible to scale those businesses in a capital efficient way. These were full stack financial services businesses, which meant that the only people who would buy them would be other financial services businesses for the most part. And those businesses would value them like a bank would value another banking asset, or a lender would value another lending asset. And so if you remember, like Lending Club stock went to the bottom, On Deck stock went to the bottom. I kind of swore off like full stack financial services. I was like, I wanted to go somewhere that cared a lot about like fundamental technology businesses that happen to be in financial services, and that just so happened to be Dan's thesis as well. So it was kind of like a match made in heaven. And so yeah, that's how I joined.
So when you say full service financial, what is it? Service full. What is it? Full service financial company? Or
Yeah,
what did you
full
say?
stack financial services businesses.
Yeah.
I create this like delineation, right? Like, what is the core value your business offers? There's tends to be three types of businesses currently in financial services that will change. Like the first is just distribution, right? So the actual financial services on the back, same as it's always been, but we're going to sell it to you digitally in a way that you didn't know, right? So if you think about insurance brokerage businesses, the actual carrier on the back is the same carrier it's always been, but we're going to let you do it online for the first time ever. The next step is we're going to actually go in.
Would you put Robinhood in that category where they have the same back end and they're kind of repurposing the way that people access those trades?
Kind of. To be honest, yes. I mean, they have made, and this was what gets them into the second category, which is like rethinking the financial service. They really brought like fractional share ownership and crypto retail ownership to the forefront. So in some ways, they've actually messed with the financial product as well. But for the most part, it's like distribution plus tech, like great UI, and you're going to be able to find us and onboard with us in a way that you haven't been able to do before. The third category is like true technology. Think Plaid, right? Like we're going to go build infrastructure and write code that enables you to do something you could not do before. So that can be policy administration systems for insurance companies. It can be a KYC AML business for banks. It can be a claims disbursement engine for financial services companies. Things that require like actual tech and code and software and workflow to be able to deliver a fundamentally better solution. Vast majority of those end up being like B2B SaaS companies, but there's some kind of notable exceptions as well. And those are kind of the three pools. And I think FinTech kind of went through that journey, right? It was a lot of like, hey, the solution's exact same, but we're going to just not use direct mail. Then it became Lending Club, which is like, we're going to do some more creative stuff on like the capital market side to give you a new product that didn't exist. And then the third wave has been stuff like, Plaid and MX and others that are building kind of infrastructure and technology that sells to both, next generation fintechs as well as incumbents, and like enables them to do and service via technology better. And I think just because of where the market was and some of the blood I had seen spilled, I had initially kind of gotten really excited about category 3. But as the capital markets infrastructure has changed and like off balance sheet credit lines and credit facilities have become a lot more the norm, I've started to like dabble towards the beginning part of that continuum as well.
Do you splice this up? Say I find it difficult to draw a line really around any industry, but say commerce, generally speaking, you mentioned early on the spend, save, shop
and secure.
Yeah, shop, secure.
Yeah.
Is there a way of splitting this up if you look like from a really high level where you have concepts of what people are trying to do? So I own things. I want to make sure those things, if they disappear, they get burned, flooded, destroyed, I get compensated for them. We call that insurance. Then there's like, I want stuff, but I don't have enough money, so I got to take out credit. So then there's a whole world of credit. Somebody has to give you. That's like, I want to get a house, I want to buy a car, I want to credit card, all credit cards. That's one concept. And then there's I own a thing, I own a house. I want to split it up into many different ways and sell parts of that. It's like, that's what startups are, and even just venture, generally speaking. But you can do that with houses, and there's some innovation there. Am I going down a line of thought that makes sense?
No, this is actually, I mean, we spent a lot of time thinking about this, because if you think about the commerce continuum, imagine it as like a semicircle with like four breakpoints, right? There's shop, spend, save, and then secure. We debated a lot about this concept of like horizontals, right? Think about auto, right? Like your car, right? There are elements of, you want to buy your car digitally online or in an omni-channel way. You want to spend money for it in a buy now, pay later way. You want to like make sure you're getting the right loan, and you're debating about how to like spend versus save, and then you want to insure it. And actually, we thought a lot about that, right? Which is like, you can have this like asset-based view, which is like home and healthcare and like all of these different ways. I think ultimately we settled for like the function, which is like, what are you doing in the moment? What is top of mind? But we've thought about that a lot. And actually, over time, and I may have mentioned this, like I've ended up falling down the rabbit hole of like what I think about as like vertical fintech, right? Like once you've established that like fintech is a fundamental function, like what are the places it ends up touching? And those places, right, those verticals around like healthcare or prop tech or whatever it might be, end up addressing what you're talking about, right? Which is like that like fundamental need a consumer has to like stay healthy, own things, and prevent disaster, right? Those things end up like having their own verticals, whether that's like healthcare or construction or whatever it might be. And there's like tendrils of financial services that touch all of those places. And I think that's probably where we'll see like the next series of billion-dollar businesses.
Yeah. Do you think that morphs in some way when things become more, I guess, abstract or digital or virtual with, certainly we're talking pre-show about Facebook pivoting into building the metaverse, but, that's like a very big company making a very serious pivot into this new direction. And the implications of that, It's kind of like when you first hear Bitcoin, you think, oh, that's cool. Your mind's like, I kind of get it. I got it. That's not the big deal. And you just like, you go back to work. But it's kind of sitting back there. You're like, well, maybe that actually is a seed that changes a lot of things. And I wonder if that's, do you need, if the vast majority, picture like 80%, 90% of people are spending the vast majority of their working day creating something in the metaverse. What disappears? I'm thinking like, are we going to be sending invoices to people in the same way? Probably, right? But some things just aren't relevant. They disappear.
So, this is super timely because I think that there's a couple things. I have to think a little bit more about like what goes away, and I'll have an answer for you in a bit. I think what's really exciting is like what shows up, right? And like what are the new needs? One of the things that we've been chewing on a lot has been the concept of like, and I think one like early step is gaming, right? If you're someone who like lives their day in Fortnite when they come home from work, like that's your metaverse, right? Like you have players and skins and you communicate and you have side bets with your friends and you have influencers and like that's your, I don't mean to be minimalistic, but like that's your world for whatever hour you're playing. And we've thought a lot about like all of the payment and commerce infrastructure you need. Imagine having a credit card in the real world, in the world that you and I live in, and instead of cashback rewards, it gave you in-app purchase discounts, right? Like you can link those two universes incredibly well, right? You can create imagine if Riot Games had a private label credit card that enabled you to get, if you spend a certain amount, you were the first person to get one of their games, right? Or like, same with Sledgehammer and Call of Duty. There are things you can do to bridge those universes. And then there's stuff like inside those universes, right? Which is, things, small things, right? We've noticed that like payments from kids, right? Like instead of having, hey dad, I need to see your face to unlock this payment for an in-app purchase, is it actually time that this child has their own card that they have strict permissions on they can spend? So there's all those implications. And the other category that we've been kind of like obsessed with as of late has been like the power of influencers. Right? Like folks who live in these communities, whether it's like YouTube or in-game or whatnot, like that's one of those things and I'll count myself as one of them. Like it's already happened, right? It's not a future trend. It's not like I hope this market gets big enough. Like I think a lot of young people take their cues from influencers in the same way, by the way, that older generations took them from actors and other celebrities. It's nothing new, but I think the commerce implications are really interesting, right? So if you're a creator, like who's providing you small business credit? Are there people who are underwriting your Twitch streams and YouTube streams? There should be. Right? Like who thinks about your personal bank account, being able to switch from your business bank to your personal bank with a toggle of a button to figure out like all of the tax implications on how much you've earned and how much you're spending. Like that ecosystem is so nascent. Yeah. And I think it's already pretty big, but we'll get even bigger.
Yeah. It's huge.
And I think the points you raised about like inter-individual, like inside the metaverse, like how do you think about, like the closest analogy I've been thinking about has been like sports betting and specifically esports betting, right? Where there are tons of people who make these like side bets based on like games that neither one player is watching or like playing, excuse me. And I think that like there's an interesting allegory there to like this, again, parallel universe that like sits outside of, where you and I drive to go get a cup of coffee. That has like real world implications and dollars.
Yeah. I think about the concept of a brand and celebrity or influencer being very much the same thing. Somebody is an influencer because they're putting conscious attention and work into creating something that's valuable and worth watching, worth consuming by other people. Yeah. And that is what brands do. They sell products or services, but they maintain a consistent, they try to maintain a consistent brand in a conscious direction. And I'm not actively working to build, I guess I am because I have this podcast, but I don't really think of it that way. I'm not, there's a lot, I think of an influencer specifically as someone who's focused on growing their viewership for the purposes of sustaining their livelihood. I want to pay rent. I want to be, all in on content creation, YouTube or Instagram or TikTok or whatever. And that could be brands. It could come directly from the platform. My brother actually started a company, Cameo, that helps people get paid for like talking to people, shout outs. And it when he started it, I was like, I don't know if there'll be enough people, some dumb comment like that. And sure enough, it turns out there's just a tsunami of people. And I think part of it is that when brands first came around, there was just a world of kind of chaos in a sense where you didn't know where to place trust. You have the government, but you might have mayors, you might have like people in town who have respectable professions like a lawyer or doctor, and they might have a little business, and there's a like brand around that. But ultimately, it's derived from a person. It's like, I know Joe is a trusty lawyer, and he started this group, and they got 8 people. Commerce is a similar thing, where it's small enough where I think of Commerce, and I think of you, I think of Dan, but imagine it were 50,000 people. Like, when I think of Google, I don't think of Sergey in the way that if there were 30 people. It's like, it's its own thing now. Sergey might as well leave, and it's going to be perfectly fine. So I think that is a cyclical process, because when brands get too big, you're like, okay, it's got to be rooted on a person. Otherwise, what is it?
I think that's a great point. And I think Cameo, by the way, is like, beyond being awesome, is a really good allegory to I think what we're talking about, which is the bar for commerce is lower now. If you were an actor back in the 80s or 90s and you wanted to start your own clothing brand, you had to get permission from like the brand you were signed under, maybe your agency. You'd have to go like you'd do a bespoke deal with JCPenney, right? Like that used to be what people would do, which is like the Brad Pitt jeans at JC, something ridiculous like that. Right now, like an influencer like can work with any of these third-party ghost companies and spit out a shirt. One of the things I was thinking about recently was I'm a kind of one of my embarrassing facts is I enjoy kind of professional fighting, and even within that, more embarrassingly, I'd say I've been watching these Jake Paul fights.
Why is that embarrassing?
I don't want to support that type of aggression, but it is hilarious. Like I have to. Like I have to know, right? Like let's put it this way. I'd like to think that I have some like class and taste in the quality of fights that I watch. Yeah. Like watching Jake Paul, who like learned Wikipedia boxing 2 years ago, makes me feel like I'm cheapening the brand, but it's for sure the most fun I have on any given week. Yeah. But one of the things that I was listening to something that he was saying, which like blew my mind. At one point during one of the pre-fight things, I think it was actually with Logan Paul and with Floyd Mayweather, Jake Paul grabs Floyd Mayweather's hat. Within 24 hours, he had sold $250,000 of merchandise with a hat that said, "I got your hat." Right? Think about the shrinking of the commerce life cycle that has to happen between like idea and monetization and platform and digital platform and supply chain. Like that's what's I think really, really fascinating. And you have these influencers who are driving like hundreds of millions of dollars, maybe like billions of dollars, I don't know, of like revenue. And for the first time, instead of being kind of beholden to their platforms, they're able to create individual monetization streams like Cameo. Right? There are actors and celebrities on Cameo who like would never have been able to create like extra revenue for themselves in such an easy way, right? Like a seamless way without Cameo. And I think that's what we're seeing with influencers. We're seeing it generally, right? Like the line between individual and small business is getting like blurrier and blurrier and blurrier. I see this even with friends. Right? I have a bunch of friends who have a bunch of clothes, and with Poshmark, they're all basically like, retailers, right? They're selling their own clothes, buying new stuff. The bar between like individual and business is so blurry. Yeah. And I think Cameo did a great job with that in like what I'll call like the upmarket, which is like celebrities and folks. But there are people on like Pinterest and Instagram and others that like we'll call it the down market, folks like you and I, you have a fun following, I do not, but who are able to kind of like monetize like on a moment's notice. And I think that's really fascinating when it comes to like changing commerce ecosystem. Yeah.
Wow. So many thoughts. I love everything you just said. One of the things that it made me think of was that if you reflect on your life, it is a story. You told me part of your life story. I'm sure you could go on, and there's challenges and depression moments and heroic moments. And you're a young guy, and it's already there. We love the drama. We love drama. Human beings love drama. I think of like the kind of the root of this in Hinduism, where life is viewed as a drama. In the Western world, we tend to view it as like particles and collections of particles, and then we have a body, and then consciousness popped out. But there's like a inverse to that view. And I kind of think this is the way that it's manifesting, the way that it's happening, is that we want to hold on to parts of that drama. Exactly. And so I interviewed a guy who started Flo Dapper Labs. He started NBA Top Shot. So they take pieces of the NBA games. They'll take like a killer dunk by LeBron or whatever, and they'll sell that on as an NFT. So you can own the moment when Kyrie Irving hits a game-winning three, and like you can sell that moment, and it's a cool concept. And Cameo very much does a similar thing. And the Jake Paul example that you gave, where you're owning moments of history, and that is pretty it's a pretty amazing concept to own a piece of the story, but it's also it doesn't really exist in a sense. You know, you're claiming ownership of it, and someone's validating it. NBA is giving your stamp of approval. But once you share it, it's experience.
You mentioned that earlier about crypto, where like some days it makes sense, and the other day you're like, well, I don't know what's happening. Like that's my relationship with NFTs. Like some days it clicks in my head. I'm like, absolutely, like this has to be a thing. I saw someone who like owned Jack Dorsey's first tweet, and I'm like, that's a fascinating concept, right? Like that's like the Mona Lisa of our generation. Other days I'm like, what am I talking about? Like that's just like it's pixels on the screen. There's no finite currency. But I've like been slowly shifting my thought on that, where I like at this point I'm pretty sure that like it's just a personal discomfort. It's actually there's this you can own that moment because it is digitally registered and it's on a blockchain, and they've like made it finite. And I think it's like purely psychological to get around that last challenge about like things that are non-physical can also be scarce. Yeah. Right. Like that's the last jump you have to make that click. And I think depending on the day and the mood, I'm totally sold. I own a couple pretty terribly performing NBA Top Shot NFTs. They got me in their pyramid scheme, unfortunately. they do a brilliant job, by the way, for folks who like don't know how it works. So you like in order to buy a drop, you have to have had X number of like packs effectively purchased beforehand. Except these drops work really well if you have a flexible schedule. If you're like me and my day is like back-to-back calls, you're going to miss the drop every time. Yeah. But in order to qualify for the next drop, the last 3 packs you bought don't count. So you have to repurchase. So what do? You go find the cheapest possible packs. The cheaper packs don't perform well at all. So I'm sitting around with like a bunch of bench warmers that like made layups back in like 2008 as my portfolio of NFTs. But I know a number of people who've had a lot more success than I have, and I think I finally get it now. So.
Yeah. I think of it as like the moment it kind of clicked for me was I was in Lake Tahoe, and I was walking past this little downtown area, and there's an art gallery. So I stop in there, and the guy has a great art collection, maybe a couple hundred pieces on the wall, and he's selling these pieces, and he's trying to convince me to buy a piece, and I'm not in there to buy a piece, but I was entertaining the conversation. So he opens up this book, and he's like, oh yeah, this piece right here, that's $13,248.55. And he's like, I was like, how do you know that's what it's worth? And of course, the debate on what is art priced. And he opens up this book. He's like, well, we got a book. Every quarter we get a book, and it shows the prices of all the pieces of art and the prices by all the painters and the year that was made and the piece that it was registered to. And he's like, you could even buy this and leave it in the gallery, and we'll pay you, this is like some small amount, to rent it. And I thought about it, like that's really in a way what the NFT concept is about. Yeah. It's about the power, the ability. Like if I buy a piece of land in Alaska, the fact that I can do something with it, that guy on NFT, if he can trade it. Now, if that Mona Lisa or that Top Shot, whatever the piece is of art that you're selling, if that can be precisely duplicated, like if I had the exact Mona Lisa, then you're starting to converge. You're starting to remove the value from it. You'll never get precisely theirs because people like sentimental value is like that's the one. It's like any sentimental value is always higher than a commodity, but you're converging. They're starting to be equal. So the more unique it can be, the more it's going to be differentiated and valuable in the market. That's the skeptical view, is that NFTs that can be easily duplicated in not authentic, like a screenshot of something. I find, imagine you put on AR glasses and you have this 3-dimensional, moving, beautiful thing. It's got stars and it's like, it's all right there, and no one can experience it unless you are willing to show them. And no one can copy it. It's one time only. That to me is I think that's the proliferation, or that's the growing. That's when it really becomes mainstream.
Yeah, I think it's a again. I'm slowly converting to a believer. I think we'll get to things like that, like particularly where AR and VR is going, but even more generally, I think that there's a generation of people who do not view the world as kind of digital with an asterisk and then real. I think for a lot of younger people, like they are one and the same, and so that sentimental value you mentioned around the physical object or like the original. I think there's like a different attitude that like I feel old even talking about it in that way. But like I talk to folks who are younger and I just don't think that delineation exists in the same way. It's kind of like what the generation before would be like, what do you mean you have an online friend? That's not real. That's not a real person. Like no, it is, right? Like it's like a different universe that I like live and operate in, and like to me that holds real value, and like that's what friendship is to me, or whatever the ending of the sentence is.
Yeah,
like, I think that we'll see a lot more of that, and there'll be people super uncomfortable.
Yeah,
with kind of like where it goes.
Kind of reminds me. I think of like our grandparents' generation would be a generation where if you came home and you said, hey mom, dad, I'm gay. I'm into guys or girls. They would, broadly speaking, they'd be opposed to that. It wasn't culturally accepted. I think the equivalent of that in our, my grandkids, they're going to come home one day and they're going to say, hey, Mike, I want to date this AI. I know you're not into AIs, but she's amazing and I've fallen in love with her. And I'm like, can't you just date a real human? Why does it happen? And we're going to be the old.
You don't understand.
You don't understand. Yeah.
I think, we'll see where that world goes. It's going to be a fun conversation. But I think you're right, though. Like, I think.
Have you started to see any of these deals? Like, have any of this like really kind of bleeding edge?
I'm trying to think of like stuff that we've seen. Like, I think the reality is like we're still not there yet on a couple fronts, but we are seeing we're seeing businesses that are making way more money on their token sales than they are their business.
Yeah.
Right. Like the actual businesses off to the side and their market making is a whole different thing. And I think a lot of it is that like there are parts of there are people that believe in that, like that future that you mentioned, right? And they're willing to like trade to be a part of it. And I think if enough, like that's how realities get built, right? Yeah. Like if enough people want it to be reality, like that's how that happens. So, I've been saying this a bunch, right? Where like sometimes it's a lot easier to try and focus on being right than like making money, right? Like you can, you think about like a stock that maybe you're glad you didn't purchase because you didn't like the CEO and the product was bad and it's gone on to make a ton of money. Most people end up saying, well, you know what? I'm glad I never invested anyway. I still don't think it's going to work out. The reality is like your objective there was to make money and you missed an opportunity, right? Like you clearly could have if you put your personal biases aside. And I think in kind of the same way, like a lot of the stuff, like I think is going to happen. And I think that like for people who are like emotionally uncomfortable and prioritize emotional comfort and talk about like how things were and like whenever I hear that argument, particularly about like things going back after the pandemic, which is like people really just want to hold and touch or people really just want to be in the same office. I'm sure that's true. I'm sure there are generations and there are pockets, but I think for the most part, that's probably not going to ever happen again, right? Yeah. Like we don't really go back in the same way that we
people love riding horses, Why can't we just drop this whole car thing? It's like, right. You can go ride a horse if you want.
You want to go to the DVD store and pick out your own film. It's important on a Friday night, right? Like the reality is like it was super fun, but it turns out that newer generations of people draw fun and emotional connectivity from things that we don't, and as a result, or we may not. And so the things that we draw emotional connectivity from, they may deprioritize, whether that's like like a movie in person.
Yeah,
right?
yeah,
like
I hear. It's like so much of it. It really is relative to what your other options are. Like tag can be the most fun ever, but if there's like tag but then you have an iPad right there, like the kid will they'll play the iPad. If you could throw the AR glasses on and like you're super warrior guy with a laser and I'm like a machine guy and like we could play tag in that super virtual world, like it's like tag on steroids. So I think that why not play the game? Don't go against it.
That's a great. I think about my childhood was like a stick in the backyard, right? Like, and I think there's a weird like people get really novel about that. They're like, oh, like that's childhood. I'm like, well, I don't know, man. If I could do that in virtual reality, like, and like interact with people, like that sounds way better.
Yeah.
I've actually like learned something instead of like, poking at a hole in the ground. Like I think that, like, I think you're totally right. Like there is like that just sentimental value about certain things that like has aged out, right? And I think it is, actually this is something that Dan mentions sometimes. Like sometimes like what you think is going to happen, surprisingly, lines up exactly with what you want to happen, right? Like the version of the future that you want or need to happen, either because it's your personal like sentiment or comfort levels, or maybe your investment portfolio, and like what you think are going to happen, like line up because you need it to. You have this incentive to think about the world in that way. And I think that like I try to look at my own biases in that way too, which is like, the reality is like what will happen is totally devoid of like what I want and what I need it to happen. Because I made, whether it's investments or personal decisions, like the world is different than it was 3 years ago. And the vast majority of my life's different like decisions were made more than 3 years ago. Right. So like I made decisions on certain assumptions and premises that are no longer true. And I think that like being realistic about like how the world has changed relative to being like, well, we're going to go back because that's what it was before and this is a one-time thing. Like I think a lot of people, myself included, will struggle. And I think it has a ton of implications, certainly on like where you spend money and how you spend money and how do you interact with technology and where that goes. I am trying to force myself to be more open-minded, hence this like will they, won't they dance I have with NFTs. Right?
Yeah.
You got to be realistic about like people like me, as silly as it sounds at like 27, people my age are actually not driving adoption of those products. It's a crazy thing to think about, right? Like Snapchat and Facebook were not made by 30-year-olds, right? Like our culture generally really is built off of teenagers, whether it's like movies or music or technology. And so like I'm already a decade removed from like where things are going in that, right? And I think that like being self-aware about how far away, a decade's a long time in like exponential like culture change, like the world will look very different than I think like I would like it to look. Wow. Which is weird. I can only imagine what it's like to be 50 or 70. You probably don't understand like, what people are thinking.
I think you get a glimpse when you have kids that approach that age.
Yeah.
I don't have kids that age. I have a 1-year-old son, but when he gets to be 12, 13, 14, 15, you're like, oh, wow, that's what people are saying and doing and playing. And it's like, that's different, but you can appreciate it and learn from it. Do you follow any people online or do you have people that you learn from? It doesn't have to be specifically on this, but Twitter or
there's a ton of folks that like I kind of respect a ton. I mean, I think as far as kind of like the world of like FinTech goes, like there's always like I love Frank Rotman's tweets. Those are always super fun to go down the rabbit hole on. But I think most of the folks that I spend a lot of time trying to like honestly learn from. It sounds corny and cheesy, but it's a bunch of the founders that we work with. I think I'll take it out of FinTech for a moment. I think that like life is an interesting like combination of like challenge and iteration, right? Like what are the challenges that you put yourself through and how many of them have you gone through to learn? And I think just the founder journey is bizarre, right? You think about it as taking a bet on yourself, doing like a series of irrational, unscalable things on repeat with no promise of outcome, right? And if you think about the way like a preferred stack works on a cap table, you have like the least to gain, right? Like you have the most risk and like, some in theory, like the best upside and like the 1% chance it works out. And I think like being around that community has been, and that's recent, right? For me it's 4 or 5 years, but being around people who have lived their lives that way. And trust me, it's not all awesome, right? As you know, right? There's definitely founders with screws loose, excuse me. But I think being around that energy has been really valuable as I think about my own decision making, and like, I think the realistic assessment of risk, right? Like what is the actual downside relative to like, what do I worry is a downside is something I feel like I've taken a lot from founders.
Yeah. I tend to think the thing that people don't factor in, I was talking to my cousin about this. He's debating leaving his like cushy banking job for a startup. And I was like, you have an enormous amount of social de-risking, like the network that you have professionally. If you failed, like the worst possible scenario, you could make a few phone calls and people would bring you on board. And even if those companies were struggling, like you could figure it out with people. Like people, and I view this as kind of, I mean, we'll wrap up soon, but I do believe that this is the problem with that we see as symptoms expressed in homelessness being in San Francisco, I was living in LA. It's like, it's pretty bad. And it's very much, I don't think we don't have enough housing problem. I think certainly the zoning laws in California are a bit terrible and should be improved, but still it's more it's a social networking. They're falling out of the fabric. And I think that has to be considered in a big way. Like we'll talk about truck drivers losing jobs, and that's a major issue. Well, what about the people who don't have online networks and relationships? Like if you're active on Twitter and you have real relationships with people online, like it's a way of de-risking any venture you get into. So
No, I totally get it. And that, again, I know we're running close, but I'll kind of force this last story up on you. In a kind of weird twist of fate, the 6 months before I joined FT Partners, I actually worked at Skid Row, like at a homeless shelter for 6 months, doing job training. So it was like you would sit down with folks and you would do the resume, you would build them a cover letter, like help them go on Indeed, find jobs, do mock interviews. Super fascinating. And actually, in some ways, my first introduction to personal finance, because I used to help them with like budgeting and stuff like that. And I talked to a lady who had such an interesting story. In my head, I just thought of her as a lady, but now she was 21, right? I just happened to be 18 at the time, or like 20 at the time, excuse me. So she was like basically my age, but in my head, she's even older. And I was kind of had to ask. I was like, how did you find it here? Come here. And she said, well, to your point, she's like, my mom passed away, and she left the house to myself and my sister. We got in an argument that turned like violent, like as siblings do. And the cops were called, and I basically ended up getting they ended up effecting like some type of restraining order where they were like, hey, you have to be away from the house. She was like, I was 19, and what is away from, or like 20? I was like, what is away from the house when it's the only home you have? And she's like, and to your point, like that was her network, right? The only node of the network was a sister she wasn't allowed to see, and like so she's been kind of like in LA on the streets for that period of time. Whereas when I think about that story, man, my sister and I fought every day. We still fight, right? And like the kind of accountability of the community in the village that like we were raised under, like that would not have happened to me. I'm very fortunate in that way. But actually that point you said really resonates, right? It's literally a function of who you know. Obviously, like beginning circumstances matter a ton, right? But having one phone call to make or two phone calls to make to people who can help you in like those single moments of deviation in your life end up changing a lot.
No, it's a really great story. Thanks for sharing that. Thanks for sharing everything today, Vivek. I really enjoyed the conversation. It was super exciting. We covered great ground. So yeah, congrats on all the progress with Commerce, and wish you guys the best of luck.
And you as well. You're now 7 years running, right?
I know, man. You make me feel old, but yeah, I started this in 2013, and my first startup was a payment. It was like a iPad point of sale, kind of like what Square is before Square was around. And we ended up selling to Big Commerce before they IPO'd or planning on IPOing. And I started this podcast from two guys that I met on Quora. Both were avid writers, and I was writing a lot on Quora. And I sent them a message like, hey, if I set up this Skype podcast, would you be down to do it? And they said yes. So we did about 5 years of just the three of us, and then started inviting more people on. But it's been a blast. I love it.
That's awesome, man. Well, thanks for doing what you do. It's good like commute listening and listening around. So I appreciate it.
Awesome, man. Well, please do if you have people that you want to invite on. I know you're well connected with great founders. So definitely shoot me an intro. And where can people find you online? Are you active? You mentioned Twitter.
So I am, in theory, I'm on Twitter. I'm at VIVEKKRI, excuse me. You can find me on LinkedIn. Weirdly, I'm more active there. You can find it on the website, and the email is Vivek, VIVEK, @commerce.vc. I'm always happy to chat FinTech, retail, insurance with anyone that speaks or breathes. So happy to have a conversation.
Awesome, man. All right, take care.
All righty.
Sweet.